Hey guys, Mike here. So obviously another kind of mixed day in the market, but the Nasdaq was green again. Why? Because people are shifting into risk. And we're going to get into all of that right here. I mean, obviously stocks flying up like crazy, going up 10, 20%. You got meme stocks going up 5,000%, which, I mean, I don't know. I'm having flashbacks, I don't know about you, of like 2020 and 2021 with GameStop and AMC and all these, crap coins that were flying up. It's almost like we're just back there again, right? It's just this madness is happening right now. And certain stocks deserve to go up, but it's just amazing to watch how quickly things are going up. And I'm going to show you exactly how much retail has jumped back into this. I got a whole bunch of stuff for you to come out. Obviously, we just had some earnings roll out, and some of the big ones, you're looking at Square. People didn't like it. It's down about 5%. We'll see what that does because PayPal and SoFi look good when they reported. You got Lyft, which I just kicked myself on this one. That one's up 6%, and then DoorDash, that's another one, up 13%. And I guess people like what they hear on the call on that so far. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. But the big thing to look for, guys, is this right here, and it's the QQQ, right? Because everybody's going to risk. It's right up against this channel. It's only 0.5% before it's going to test this channel tomorrow, because I just did this after close today. You can see it broke the 50. It's above the 100. You see those gaps right there it created when it did all these jump ups in the morning. You see the volumes greater than it was in November and December. RSI is getting close to oversold, but it can stay there for a long time. MACD right there, is it getting ready to roll over? Now, these are all big questions, and, is this a bear trap, bull trap, whatever you want to call it? That's what we're trying to figure out, comparing it to the last time we moved up in March right there. You can see the RSI wasn't even as high as it was now, and the MACD rolled over, and obviously you see where we're at now. But this has been a rip-roaring rally, and off those high-growth stocks that I showed you, that were basing out, right, going in that stage one right there, before they were trying to move into stage two. And that's pretty much what's happened. You see it with ARK, all those kind of stocks. But of course, what's also led the way is Apple, the big boys, right? All those FANG stocks, they're sitting here, and Apple's just been on a tear, and it has such a huge market cap that those stocks, I've told you before many times, they can lift the market. And I'll touch base on that in this video. You may disagree with what I got to say, but I just feel that it makes sense to me now. And I'll never look at this indicator again, to be honest with you, until things change. But you can see right here, you see what? ARK right there, boom, getting the inflows, right? It's been inflowing since at least, February? That's how the inflows, only had June, was only negative. People are flowing in, and here's retail investors, guys. This is the 10-day DMA right here. Look at that. And retail investors are coming back in into single stocks, and they're saying the heck with ETFs. ETFs is the one pointing down right there. And so they're wanting to go more risk on, and that's exactly what they're doing. And the thing you have to remember, and I talked to one of the members about this months ago, is these stocks aren't moving up on fundamentals, right? It's not like things are rosy and peachy, right? Every day there's announcements of layoffs happening. You got stocks that are missing both top, bottom line, and either not changing guidance or guiding down and still going up in this rally. Okay, so this is not some fundamental, oh my God, these companies look great and growth looks fantastic. It's nothing like that, right? This is based off people just coming on speculation that the Fed is going to pivot in either March, April, or May of next year. And two, have you noticed something during all of these earnings calls, especially some companies which have never even really done it before and actually taking out debt to do it, is the stock buybacks is massive in tech. I mean, if you look right here, look at this. Look at where tech's at, and then the only thing beating them is the banks, which they always do a lot of buybacks, right? But look at that. There are so many tech companies right now that are taking on debt to actually do stock buybacks. And to me, you can look at it as a good thing or a bad thing, to be totally honest with you. And, I look at it as almost like a negative. I mean, I expect it from the FANG stocks because of this right here. Look at, for the first time ever, FANG revenue real growth percentage is negative. It went negative. You can see the downtrend right there, right? Look at that. Every time it's a downtrend, it finally went negative. And I even went over these earnings calls with you that, people say, oh, they smashed it. Ain't nobody smashed earnings, by the way. Not none of those FANG stocks. They just barely made it through. Some of them didn't even hit their own revised estimates, for God's sakes. And yet their stocks went up. I mean, Microsoft is trading at a very high multiple right now compared to a lot of them. and yet their stocks went up. I mean, Microsoft is trading at a very high multiple right now compared to a lot of them. And so, that's where we're at right now. And almost, like, I don't know how you feel about it, but man, I can literally sense the FOMO. Like, I can feel the FOMO. Like, people just FOMOing in like crazy right now, it feels like. And again, maybe it's just because I'm seeing these meme stocks come back in, some crap coins that shouldn't be moving up are just absolutely skyrocketing right now. And it's like, oof, okay, people really got short memories, I guess. But, it's, again, remember, I've told you before, I told you weeks and weeks ago, I said the market can absolutely just detach itself from the economy and say, we're good, whatever. And it's almost like I can't figure out if, we'll find out if this rally really has legs after tomorrow, after CPI data, which is on the 10th, so it's just coming up early next week. And, whether or not, or it's just obviously a fake out, and then we're heading back lower. And because there's so much mixed economic data right now, this looks bad, this looks good, this looks really bad, no, this looks great. And so you can't figure out which way's heads or tails. And there's some that came out this week that, sat there and people are like, oh my God, this is bad. And when you really look at the data, you kind of go, not really, it's just you're wanting to sell some headlines. So your headline makes it look bad, but when you dig into it, it's not really as bad as you think. It has to do with the consumer, right? That's what it's all about. Are we going to continue to just spend and spend and spend? Even not just us, but the businesses are still spending, right? What they're doing is they're laying people off, and then that's their cutbacks. That's their biggest expense is obviously benefits and labor, right? For any company. So they're just, what have you heard a lot of them say? Time to get more productive, guys. Yes, that's right. Instead of you doing your job, you're going to do yours and Billy's job now. That's the way it has to be. Facebook, Google, all of them have come out and said that. Said, nope, we're laying people off. You guys got to get more productive, right? That's how we cut costs. We buy back this stock and keep driving this puppy forward, right? It has nothing to do with fundamentals and growth and everything else. Nothing to do with that. All right, not right now at least. And you can see right here, this is what somebody had talked to me about. And you can see U.S. credit card debt surges over the past year. And it looks horrible when you look at it like that. But remember, look where we're at. We shut down all the companies, locked ourselves in our house, and gave ourselves money. So the government gave us money. So what happened? A lot of people paid down their credit card debt. Then you let us out, like letting dogs off a leash. They ain't never ate in like a year. And of course, they're running for the stakes, right? They want a lot of food. So boom, spend, spend, spend. When you look at 2019, that increase ain't so bad. When you go back to 08, all the way back to 08, right before the market crashed, the increase doesn't even look anywhere near as bad. Is it good that we're increasing credit card debt? No. Everything's more expensive. And yes, we got to sit there and put it on the credit card. That's what most people are doing right now. They're not paying them off like they used to. And that leads us into delinquencies. I told you I'd keep you updated on this of 30 plus days. And you see it. This is car loans, credit cards, all the stuff, student loans, mortgages. And you can see there is a little turn up in delinquencies. But are we shocked by this? No, we should be expecting this. And if things were as bad as what most people think they are, you would think this would be way, way worse. But this is why the banks even said that they were going to start, increasing the money to make up and account for what they consume to be more delinquencies. And I think I saw a percentage, I don't know what it was, like delinquencies are at 3.1% and they project to be 3.4%, which is not a big jump at all. And I'm surprised this isn't even worse, right? Which means, are we as bad off as people think? Again, it goes back to how much people have in savings, how much can they run up on that credit card and their home loans and everything else. And so, this is where we're at. And think about the housing market. The one thing that's interesting is why I think the savings balances, and this is just a total guess, are as high as they actually are. If people can't buy homes, that money just stays in investments and savings, right? Because what do you do when you buy a home? You normally put money down, depending on what kind of loan you get. And so if all that money is not going towards buying a home, it's just sitting in a bank account, looking good, right? And, right now what's happening? Gas is coming down. Interest rates on the mortgages are coming down. Other expenses are coming down. The question is, will they stay down? How fast will they come down? Meanwhile, you got rents still going up, right? And so, which is a big one. Food really isn't dropping like it's supposed to yet. We'll see. I heard an interview from a grocer 2 days ago who runs grocery stores, and he said, we don't see food costs coming down. And talking to my brother-in-law who's in the farming business, who is a farmer, and all his family's farmers, they even said, well, think about it. If demand stays here And we know we have less supply. We have less crops coming in, even from Ukraine. I mean, they planted 1.5 million less acres, right? And they're having trouble getting it out of there because Russia's playing games. But we know we got less coming to the market, right? And so that means supply drops down to here. What happens to cost? What happens to the price of those goods? Well, they're going to go up, right? And so, or at least stay the same. There's no reason for them to drop, you know? And so that's the kind of stuff we got to wait and see. We'll see when fall rolls around and crops roll in. But you know, that's kind of where we're at right now. We'll see if we break out of this channel. If we can break out of it or end up coming down, we don't know. There's a lot of momentum, a lot of FOMO going into it. I mean, people are piling into this thing, and it's got this feel of like this last ditch effort where it's like, yeah, all the, you know, because people go, oh, look, the bond yields are coming down. Yeah, the bond yields are coming down not for a good reason, right? Like, ask yourself, why would the Fed lower rates like in the first, second quarter of next year? They're only going to lower rates when they know the growth has slowed so much that we're usually in a real recession. So they lower the rates to try to generate growth, right? And so that's not a good thing for the economy. And so remember, I did a video a long time ago, and I said it's like this last hurrah where the market goes, uh-oh, we're screwed. And so let's just run this puppy up as fast as we can, build our shorts up, and then we'll yank it out from everybody. So it can go on for a long time. And we're going to see if we break out of that channel. You know, I even see a lot of short sellers who I follow and stuff and see what they're saying. You know, they've been burned over this last month. And even they're saying, you know what, a couple more days of this and yeah, I'm going long. Like, that's seriously what you're hearing from them. And when you start seeing the shorts start talking about that, they're like, oh, okay. Yeah, I let you know. And they're switching teams. They kind of see what's going on, the charts and the momentum and everything is pushing this. And so, you know, that's kind of where we're at. You know, I don't know what the heck's going to happen. I'm always honest about that. I think anybody that does is lying to you straight to your face. But, you know, it's like I said in the video the other day. It don't matter whether the bottom was June or the bottom's going to be coming up sometime in the future, whatever. You know, you're still getting stocks way cheaper than you could have got them for in 2021. That's just the way it is. It's still a gift right here. You know, and that's the way I look at it. I mean, some stocks are down so massive, even still after this rally. You know, I saw Fubo TV. If you look at Fubo TV on earnings, you go, man, I think it's up, I don't know, 20% or something. You know what that equates to? 58 cents. You know why? Because that stock was $33 in November 2021. So what is that, 9 months ago? And now it's down to $3.58 or something. You know, so look, you see all these huge percentage gains and you think they're great. And if you bought them at the bottom, that's great. But if you've been riding those stocks all the way down, it ain't nothing. It don't even make a dent in your account, right? I mean, it's ridiculous. I see people getting all, oh, it's up this much. Like, really? Like, that equates to like 78 cents. Versus last year, you were used to that same percentage, equated to like $2 to $5 a share, right? And so, but these stocks have just been beat down. Oh, it's crazy. That's another thing. See all these SPACs all of a sudden going up double, you know, 20, 30, 40% in a day or something. It's like it's almost like madness is happening again or something. So I don't know. Give me your opinion down in the comments. I'll end up seeing you guys tomorrow, and I'll have one coming out Sunday. And I want to wait to do it Sunday because tomorrow is non-farm payrolls, and who knows how that's going to affect the market. We'll see. But, you know, that right there, Sunday's video, you get to see exactly what question we have to answer. And it's actually a really tougher question than you think. I mean, I've looked through it multiple times trying to figure it out. Listen to other people on it too, and it's like, it's so mixed right now on where we're at in this certain thing. But that, to me, that's the deciding factor right there as to where the market's actually going to be heading to, and the economy for that matter. So anyway, hope you guys have a good one, and I'll see you tomorrow.